Welcome to another Tracking Trends Thursday of Kristen Mason Coreas, owner of the Homes by Mason team. Today is Thursday, June 5th. Let's see what's happening in real estate. Mortgage rates have moved down really just a touch. So we are, as of today, the average for a 30-year fixed mortgage, 6.85. That is what the monthly average has been, and still above what the 52-week average has been. So down from last week, but still where we have been hovering in the high sixes. So there's been stability there. It's nice to have some stability. We'd like to see that number lower, but stability at least provides some level of predictability. Really, the rest of what I have to share with you also is more of the same. So, I guess that does show trends when we're seeing more of the same. In regards to economic news, I guess that's where the most uncertainty has been, as people not knowing where we are and where we're going with overall financial circumstances. What we see here is that consumer confidence actually increased in May due to decreased tensions with China and improved outlooks there for jobs and the overall economy. GDP fell a touch in Q1. So that's a mixed bag, right? So increased consumer confidence, but actually decreased consumer spending. And let's see, so record trade deficits despite stronger business investment and inventory growth. So there's some mixed news in terms of what's happening in the economy. And therefore, the Fed, who sets their interest rate based upon what's happening in the economy, is taking a wait and see approach. So they're just kind of holding steady to see what pans out, right? Instead of like good news, bad news, good news, bad news, let's wait and see, is their approach to their decision in regards to interest rates. The overall prediction has been that interest rates will go down at the end of the year. That prediction is based upon if the economy is not doing well. That's why the Fed would then reduce their rate, which has an influence on mortgage interest rates coming down if the economy is not doing well. So right now, it seems like we don't know which way it's going. And so therefore, I would say we don't know if interest rates are going to come down or not. So they are where they are right now. And I'd love to tell you, I have been telling people that, they will come down, but frankly, that remains to be seen. In terms of home prices have continued to rise. The pace could slow. That's what we have been expecting and anticipating. More sellers have been coming back to the market. You'll see that inventory has continued to increase. Pending home sales did fall in April by 6.3%, more than expected. So, and that is believed to be as a result of the rising mortgage rates and economic uncertainty impacting buyer demand and bringing that down. Purchase applications, though, last week rose by 2% and are up 18% from a year ago. And they're thinking that is because there is increased inventory. So again, there's kind of a mixed bag, increased inventory, but increased interest rates. So more homes to choose from, but those homes, because the prices have not really come down, do cost more at a higher interest rate. So mixed news economically. In terms of the real estate market, this is where there's more of the same. Homes are taking longer to go under contract. We've been seeing that consistently lately, and prices are still rising. So we're not yet seeing prices come down, although we have been expecting and anticipating a flatlining of the prices. But the median list price is up 5.8% over the same week last year and up 1.3% from last week for the Mid-Atlantic region is the data we're looking at here. And new listings are also increasing. So that's another trend we've been seeing. That's for the Mid-Atlantic region. In the larger DC metro area, we are seeing purchase contracts up from last year, but down from last week. So usually this time of year, as summer approaches, we do start to see less buyer activity. So we may be seeing that seasonal decrease in activity already when we see that week over week data. But good news that there's more purchase contracts than the same time last year. Time to contract has increased, a median 30 days. That's a long time in my world. So 8 days over last year, 8 days longer than last year, and 5 days longer than last week. This is hard for us who are listing agents. Again, we are used to things selling really in the first weekend, if not in the first weekend, in the second weekend. So these are longer time frames. It means that we and our sellers may have to have a little more patience and reset our expectations in terms of how long it takes for a home to sell in our area. New listings are up, and this is part of the reason why time is up, because people have more choices in the inventory out there. So inventory is up, new inventory, for almost 5% from last year and 6% from last week. Active listings, a big jump, 45.6% from last year and up 1.3% from last week. Price has not gone down. It is up 12.5% from last year and 7.2% from last week. So our hyperlocal area that we run at Homes by Mason is for Arlington, Alexandria, Fairfax, Falls, Church. And this is data up until 2 days ago. So we run it now, I think Wednesday to Tuesday is what we run. So this is as of this Tuesday, we're looking at week over week. New listings have increased week over week by 33.74%. So that is an offset from the week before. The week before we were down 37%, but now we're up 33%. So that just kind of evened out. Year over year, we're up 25% in terms of new listings, and then contracts were also up. So this is, I think, let me look, Memorial Day. When was Memorial Day? Was that the last weekend? So I think it was. And so that might be impacting our numbers, right? The week of Memorial Day, there would have been less listings and less showings. So now the activity that would have happened that week, we're seeing recovered this week. So therefore, our contracts were up 19% from last week. And you can see the week before, they were down 19%. So we're basically back even. And then we are up 13% from the year before. So our demand to supply ratio, which looks at how many homes went under contract compared to how many new listings came on the market, at 82%. So 82% demand this past week. So I would say it was a relatively healthy week in the market. Our average days on market, I don't have an arrow, it's over here, 21 days in our hyperlocal. So that is a little bit better than the larger DC metro area. Still longer than what I'm accustomed to, but 21 average days on market this past week for homes that went under contract. So that is your Tracking Trends Thursday. And if you ever want to have a conversation about what is happening in real estate and how that impacts you directly and the decisions that you need to make about real estate, please reach out anytime. The best way to reach me is phone or text at 571-210-1866. You can also email me at kristen@homesbymason.com, or there's a link down below to get on my calendar. So thanks for watching, and I will see you next week.